Hyperscale cloud and AI investment setting up for a good backdrop for Cisco, which delivered a quarterly beat and slightly better than expected guidance. We're going to go into that. Joining us now, Chairman and CEO of Chuck Robbins, on the eve, by the way, Carl, of my 12 o'clock in CNBC Investing Club meeting where we own the stock for the trust. Chuck, it's love you have you on the show, and why don't you give us a little background on the vast majority of your business that is indeed doing better than expected?
Yeah, Jim, thank you. I'm really proud of what the teams have done. We had a strong quarter. If you go back over the course of the year, we grew 5%. We grew EPS very strong. Q4 was up meaningfully, 8 and then double digits on EPS. We talked about the AI orders. If you go back a little over a year ago, we set a target of achieving $1 billion of AI orders from our web scale customers. We more than doubled that. And one of the key things that everyone wanted to know was, is it actually turning into revenue, which was confusing to me because I thought when we take orders, we actually do ship those to customers. But we did acknowledge that we recognized roughly $1 billion of AI infrastructure orders during the quarter. Our core networking was strong, and security is actually improving. I heard you talking about it earlier, and I'm sure we'll talk about it, but security is getting a lot better. So.
Well, let's go there for a second. I think there was a consensus that security was disappointing, and that if you asterisk it, though, a lot of the disappointment came in specifically with the federal government. Otherwise, it would have been a lot. But maybe Chuck, it's not fair to asterisk it, and that just should matter. It wasn't as strong as you would have liked. Yeah,
I mean, you have to deal with what you can control. So, a couple of data points that we gave. Number one, our overall bookings, if you take out U.S. federal, were up 10%. The rest of the world, and security, if you take out U.S. federal, was up double digits from an orders perspective. So it at least tells us that there's a broad adoption of these new technologies across our enterprise customers, our commercial customers, the service providers and telcos, and public sector outside the United States, candidly. And so we feel good about that. We have been working hard on this new innovation. As I've talked about many times, I would say the pace of innovation that we're delivering today is probably faster than I've seen since I've been CEO and long before. And the new and refreshed security products that we have, which comprises 2/3 of the organic Cisco security portfolio, grew in excess of 20% during the quarter. Splunk's doing really well. It's just things are actually moving very much in the right direction, even though the numbers aren't quite where we want them to be yet.
Chuck, we keep looking for areas of potential friction. We keep coming back to the grid and power demand, power capacity. But is that a layer removed from the dynamic that you're inhabiting at the moment?
Yeah, we're not directly involved with those, other than trying to build silicon and products that actually consume much less energy than they have in prior generations, and we've done exactly that. That's one of the key reasons that these customers in the web scale space continue to have strong demand for our technology. Think about the large cloud providers, the 6 of them. They grew triple digits for us during the year, 4 quarters in a row of greater than 100% growth. And so this power issue they're dealing with, we're providing products that consume less power, and that's where they love the performance of our silicon.
Chuck, we're trying to we have a debate here actually all day for a lot of the different shows about labor and how much is going to be saved. Now, Chuck, a huge theme that you had was agentics. Now, the subtext of agentics is the ability to be able to make it so that machines do what inexpensive machines do what expensive people can. You referenced it so many times that it made me feel that, Jim, get on board agentics. Is let's say the zeitgeist, the narrative, a little too behind the trend of what's going on in the trenches?
Well, I think every customer I talk to, agentic is the destination they're trying to get to. And the thing that really makes Cisco unique in our ability to help our customers deliver on that is all of this real-time, low-latency communication that's going to be happening consistently between agents actually to perform these tasks. There's 2 big things it drives: low-latency network capacity demand, and you have to put security into the network. You cannot introduce more latency in the network by forcing this traffic through some appliance, some firewall appliance sitting somewhere. You have to put it in the network. So we're now fusing security into the network. That's the second thing. As it relates to labor, I think most of my peers would suggest that they do expect to be hiring fewer people if we get this right. It's early, but every rec that we have at Cisco, I'm challenging my team, take a look. And do we need to hire that person, or can we do this with technology? And it's early, but I think that we're going to get there to where our pace of hiring over time should be slow. I don't want to get rid of a bunch of people right now. I don't want to get rid of engineers. I just want our engineers we have today to innovate faster and be more productive, and that gives us a competitive advantage.